Most people think the stock market is all chaos and risk, but let's clear up those misconceptions right now. Screens flashing with graphs, traders shouting on the floor, and an atmosphere thick with tension. That's the typical image. But here's the truth. Investing isn't gambling. It's a smart way to build wealth when you know what you're doing. In this guide, we'll walk through exactly how to start investing, step by step, even if you're brand new. Let's begin with the basics and understand what the stock market really is. The stock market isn't a casino, it's a real marketplace where actual transactions happen. Just like buying groceries at a supermarket, you're simply purchasing shares in a marketplace. A share means ownership. Buy one share of Infosys and you own a tiny piece of that company. When the company grows, your share value grows right along with it. Before you invest a single rupee, you need to set a clear financial goal. Investing without a goal is like traveling without a destination. You'll wander aimlessly. Maybe you're saving for a car, building a retirement fund, or just trying to beat inflation. Decide if your goal is short-term, medium-term, or long-term. Your goal determines where you invest and how much you put in. Now let's get you set up with the accounts you need to start trading. You'll need both a Demat account and a trading account working together. Your Demat account is like a digital locker that stores your shares safely. Your trading account lets you buy and sell those shares whenever you want. You can open these accounts easily with trusted brokers like Zerodha, Grow, or Upstocks. Just upload your documents, PAN, Aadhaar, and bank details, and your account is ready in minutes. Here's where most beginners go wrong. They need to learn before they leap. Investing first and learning later is a big mistake that costs people money. Start by understanding the basics like Sensex and Nifty. Learn the difference between large cap, mid cap, and small cap stocks. Get familiar with stocks, mutual funds, and ETFs so you know your options. Knowledge equals profit. The more you understand, the better your returns. Ignorance equals loss. Skipping education leads to poor decisions and financial setbacks. You don't need to be rich to start. Let's talk about taking that first step. Don't wait to become rich to start investing. Start small, but start now. Begin with mutual funds or index funds, which are beginner-friendly and less risky. Consistency matters more than the amount. Regular investing builds wealth over time. Before you go, let's cover 3 common mistakes you absolutely must avoid. Don't invest based on tips or rumors. Always do your own research first. Don't panic when the market falls. It's temporary and part of the normal cycle. Don't expect overnight returns. Building real wealth takes time and patience. The stock market rewards patient people, not necessarily the smartest ones. Your journey to wealth starts now. Take that first step today. Start today, stay consistent, and let time work its magic to build your wealth. Even the world's richest investors began with small, simple steps just like yours. Take your first step now, because that's exactly where your wealth journey begins. This is Money Mastery, and I'm here to help you master your money step by step. If this helped you, like, subscribe, and hit the bell icon to stay connected. In our next video, I'll show you something that takes your investing further. We're covering how to choose the best mutual funds in India for beginners. Until then, keep learning, keep investing, and keep mastering your money.